Well, let's get talking. Now, the United Kingdom is beginning 2023 on the brink of recession as households and businesses come under intense pressure from the cost of living crisis, with inflation at the highest rate since the early 1980s. The Bank of England has said the country is on track for a prolonged recession as households struggle to keep with a soaring cost of food, energy, and other basic essentials. Here are 5 charts for the UK economic prospects in 2023. Britain enters 2022 with inflation at just over 5% as the aftershock of COVID-19 pandemic and supply chain problems took their toll. But Russia's invasion of Ukraine drove up inflation even further, with high energy costs for businesses and consumers rising to high-watering levels, and inflation reaching a peak of just over 11% in October, the highest level since 1981. Well, let's discuss this and many other issues with an investment banker and financial advisor, Mr. Gbenga Ogunrinola, who joins me via Zoom from the United Kingdom. Compliments of the season. I wish you a happy new year. Thank you for your time.
Thank you, Tolope. It's nice being here again today.
Yes, if you heard my introduction, I talked about flattering growth rate, inflation. But before I go into that, let's talk about the festivities. How was the buying, selling, the business environment all through the festive season, talking about Christmas and New Year celebrations? Was it as it used to be, or was there any shortfall from any end?
Well, yeah, I think towards the end of the year, particularly in the last 2 months, there was a pickup in activities, in business activities in the UK. And we saw people going back to their traditional ways of buying things, yet even though still being a little bit skeptical about what lies ahead. But at least people came out of their shelves and they were able to still go through the normal traditional ways of buying things. Of course, a lot of things that were not needed, any extra thing that was not needed was boycotted this time around. But you could still see things still picking up and people doing their usual shopping and business activities towards the end of the year.
So now they're saying that the UK is on the brink of recession, considering all of the fundamentals surrounding that economy. Can you take us through what might likely, well, it's looking like the country is getting into recession one way or the other, but what are the fundamentals responsible for this? Let me ask.
All right, so we're still looking for, waiting for the figures for December. Currently, the inflation rate is about 9.3%, and I think by tomorrow or next, the Bank of England will release what the inflation rate is as at December. But November, it was 9.3%, which kind of saw a little drop, because it got to as high as 11% at one point in time. There's been a lot of attention on the economy, particularly by the current cabinet of Rishi Sunak. At the beginning of the year, he actually came up with a 5-point agenda that more like a pledge, trying to have the buy-in of the people and the populace generally, that is going to do a number of things to ensure that the economy of the United Kingdom, has a better upgrade in the year 2023. And one of the things he promised, among the 5-point agenda, one of the things he said is that he was going to have inflation, of course. So when he says he's going to have the inflation rate, what he's technically saying is that it's going to reduce inflation from what it was about 9.3%, or let's say it even came a little bit higher as of December, is going to make it about 4 to 5%. That would need a lot of tact and a lot of dexterity to do that, looking at the current situation of things. And he also promised that he was going to cut the nation's debts, significantly. And he was also going to get the economy back to its growth stage. So these are, very lofty pledge and ideas. And I believe that it's within reach. It's not something that is out of reach. A number of companies and organizations in the UK that are into production, they can help, with all these things that the government is trying to do. And also the energy sector that has also been one of the major cause of the inflation. I believe that in the year 2023 might also see some leverage and some helpline coming in, because already as at December, we noticed that the price of energy generally, like fuel and all that, came down, and it's still coming down. And it's possible that with many of the alternatives that a lot of these European governments are putting in place are beginning to yield in results in the area of energy, alternative energy to the Russian over dependence on Russia for their energy supplies. So I believe that it's within reach, and if all hands are on deck, we could see a situation where there could be some smiles at the end of the day towards the year 2023.
Of course, the economy is struggling to get back to COVID levels. Let's look at house prices now, and of course, issues around soaring mortgage costs. UK residents are also worried about this. How is that affecting people?
Yes, initially before Rishi Sunak came in, the percentage rate on mortgage actually skyrocketed, and it was alarming. And that was one of the things that actually led to the previous governments being pushed aside. It became unbearable. But when Rishi Sunak came in, it started reducing a little, and it's still not gotten to where it was. I mean, pre-COVID, but it's not as bad as it was, before he came in. And he's trying. I believe that he's trying his best, using his economic dexterity and knowledge to see what can be done, to get all these things in line and in shape. There's been a number of, top firms predicting that the UK's economy might really have a worse hit this year. But from the way I'm looking at things, except maybe there's an escalation, in the Russian-Ukraine war, if things remain the way they are, I see a situation where things will gradually go back to normal, for most of these economies. When you compare these economies with that of the US, France, Germany, they appear to be almost on the same rates when it comes to inflation and all that. And I see a situation where many of them are already worried about the interest rates, because you can't talk about inflation without the interest rates. The interest rates are also skyrocketing to decade highest rates in decades. And many of them are worried that they cannot continue like that. And they know that this thing is going to affect the economy generally. So everybody is being cautious. At the same time, they're also looking at how realistic it is to continue to raise the interest rates. And of course, they have no choice if inflation continues to grow. So everybody's hand is on deck to ensure that the inflation rate is cut to the barest minimum. And I think they are really thinking outside the box to ensure that this happens.
Let's talk about COVID resurgence now in China, where we've seen a little bit of reopening from that end. But I'm looking at how that would affect manufacturing, production, because everyone believes that China remains the powerhouse. What effect would that have on businesses in the United Kingdom? Or has it started having any effect? Talking about this COVID issue still resurfacing in China.
All right, so it's not really having any effects yet.
Okay.
One of the pledges that the Prime Minister made, at the beginning of the year was that it was going to see how he's going to also encourage more people to go into labor. I mean, there's been a reduction of people, after the COVID that are actually working in the working class sector of the economy. And he said he's going to try to see how that can be resolved, even though one of the reasons that some pundits ascribe to that is because of the Brexit. A lot of people that were in the UK, I mean, left as a result of Brexit. The Prime Minister has promised that he was going to see how he can encourage more people to come into labor, and that, of course, would boost the economy generally. So I believe that a number of countries are not ready to go back to the lockdown eras, that we had during the COVID period. And definitely what they would do is to encourage more vaccination, people taking extra jabs and all that. But the economy are too fragile now to succumb to another COVID shutdown. Definitely that would be a death blow to most economies if they do that.
Yes, somebody told me that many countries don't have that capacity to go back to any form of lockdown. The fragility is so obvious. Even here in Nigeria, we've opened up everywhere, so it's really difficult to go back to those days. But let's talk about unemployment. The forecast is not looking good considering all of these challenges. Are new jobs being created? What's happening with regards to jobs around the United Kingdom at the moment?
There's a lot of jobs, really, a lot of jobs in the UK. It depends on the sector you are looking at. All right, in the manufacturing sector, especially maybe the unskilled sector of the economy, you have a lot of jobs that are waiting for people there. Of course, that would also feed the higher echelon of the economy. So it's something that is from the bottom goes up. So when the production is high and the economy itself is making progress, it's going to have a chain effect whereby generally everybody would have a feel of it from the top to the bottom. So there is work, and the encouragement is that more people, because like I said earlier, after the COVID, a lot of people, especially those in their 50s upward, many of them decided to just leave work. And so there's vacancy. Yes, there's vacancies almost in every aspect, but I think you have more of it in the lower echelon, where you talk of unskilled labor in the area of production and manpower.
Well, let's talk about markets now. Yes, stock markets, the performance of the market. It's been flip-flop considering what we've seen. Can you do an overview of what you've seen towards the end of the year and your outlook for the entire market space? Of course, a bit global.
Yes, all right. So the Nigerian market, let me start from the Nigerian market.
Go ahead, let's start from home.
Yes, close at about 19.98 in the year 2022, which was quite significant when you compare it with other global markets. And so far this year, it's also started on a good note. It's doing about 0.93% year to date, which is not bad at all. If you compare that with other major economies in the world, like the US, the US market had a very bad 2022. I think probably it's one of the worst years in the capital markets. The S&P 500 lost, and it closed at a year-to-date of about 19.44%. The Dow Jones closed at about minus 8.78% too, losing. Nasdaq was the worst hit with about 0.33% also losing. Now, when you compare that with countries like the UK, it seems that maybe the UK had a slighter or a milder effect on the market, even though the FTSE 100 closed slightly, I think around 1%. The FTSE 250, which is actually the major picture of the UK economy, closed at minus 19.7%. Then you look at the Germany's DAX closed also negatively at 12.3%. You look at the French CAC, which closed at about 9.5%. So generally, the global markets in the year, or rather the stock markets in the year 2022 had a very bad return generally. And so when we say Nigeria closed at 19.98%, that is quite significant. In the US, I foresee a situation where the stock markets will pick up in the year 2023. it's lost so much. And one of the things that you see in the US economy is that there's a correlation between the stock market and the price movement of the US dollar globally. So anytime you see the US dollar moving up globally, the stock market is likely to be declining. And by the time you see the stock market moving up, then you notice that the US dollar is declining. So there's that inverse correlation between the stock market and the US dollar price in the global market. So I see a situation where the price of stocks generally in the US would move up this year and try to recover from the great loss that they had in the year 2022. Similarly, we could see that in Europe and the developed world. I want to see that, or I want to say that if we don't see an escalation in the war in Russia and Ukraine and the other Asian countries that are also, threatening wars currently. You have South Korea and North Korea, breathing and threatening war. You have Taiwan and China, they are still there. If we don't see any escalation in all those areas, generally, I want to believe that we'll see a better performance in the capital market, in the stock market in the year 2023.
Maybe projections already, Mr. Ogunrinola. But before I let you go, do you think, now back to the Nigerian market again, do you think it is attractive as it should be for foreign investors to come in? Domestic players have had their way in that market. Many believe that it's time for this, guys, not the hot monies, foreign direct investment into the country. Do you think we are open for business?
Well, we are. What we need to do is to deepen our markets. Our market is not really so deep enough. It's prone to easy, well, I would say manipulation, but it's prone to be, just a few dollars coming into the market is very easy to decide the direction of the markets. And so when you really want investors, you want to give them options, you want to give them you want to be versatile. You want them to come in and it's like it's not something that's easily predictable, because by the time you mop up everything, the only way the price would do is to go up. So we need to have a more deepened market whereby there are various securities, there are various companies that could be invested in. I think that would really open up our economy to real direct foreign investment. If we are really talking about that, we need to really open up the economy. Some of these are government parastatals. We've been talking about so many of them that they should come to the markets, and get quoted on the market. And this will boost the production level of the economy generally, and it will boost the economy generally. So if we can deepen our markets, we'll see more foreign investors coming in. 2022 has been a bit silent, due to so many reasons. Many of these investors are also having it not so good in their own country, and they would need to look at what is actually happening and try to see if it's better investing in their countries. The interest rates in most of these countries are maybe 40-year high, 30-year high. So they would rather put the money in their own countries and bring it to Nigeria or other developing countries or economies. So that has been one of the challenges we had in the year 2022. But I believe that with the kind of good news we are having in our countries, the foreign investors too want to look at what is really happening. And if they come and they see a deep market, then they'll be encouraged to come in. Another thing we need to do is our foreign exchange policy, which has not really been so encouraging for the foreign investors. They come into the markets when it's time to cash out. They are unable to take their funds out. It's a big discouragement for many of them. If we look at that, and it's something that they can come in easily and also go out easily, free entry, free exits, it's going to really help the market. So I think if we put this in place, deepen the market, improve on our foreign exchange policies, we'll have so much investors coming to the market, because our market remains one of the best and one of the most viable in terms of profitability in the world.
Brilliant conversation there. I must thank you so much for your time. I've been speaking to Mr. Gbenga Ogunrinola, who is an investment banker and financial advisor. He joined us from the United Kingdom. Thank you so much for making sense of this topic.
Thank you, Tolu. It's nice being here again.